Good morning. You're watching the market right here on ET Now. And, the market, or rather the Nifty, I should say, continues to elude that life high. The Sensex, though, made it yesterday. But I think what's happening in the broader market, and especially in the block deals, I think that's where the action is, isn't it?
No, all the action in the studio. Look, the sun is shining bright early in the morning.
It is.
Well, just adding to some of the brightness of the viewers who are watching us, right?
No, I mean, that's the way it is.
The block deals.
The block deals. No, it's not bad. You had an all-time high on the Sensex yesterday. Yeah. Nifty almost like 8-9 points. So purely in terms of the directional move, the ring which we've been waiting for, that's happened now. Now, where do we go from here? Well, the fact that we touched a new all-time high on the Sensex is yesterday's story. It's not going to be tomorrow's trend. What are the contours? The contours are that, yes, foreign institutional investors, they've sold, but they've come back also. The desire to participate in mid and small cap stocks, I think, is evident. Let's look at that data. The optimism in the broader market, I think, is unparalleled. The participation in block deals, I think, in the broader market and in individual stocks, I think, is exciting. And look at the markets in this quarter. Nifty is up 9%, mid cap index is up 19%, and the small cap index is up 20%. Hello.
Yeah,
20%.
I mean, even yesterday we were only 31 points away.
Yeah, so that all-time high is formality. What happens after that, I don't think we are done with the rally.
Yeah.
I again say it again, what I learned in my school, the law of Newton.
Yeah.
If a market is in momentum, it will remain in momentum till the time the contours do not change, which is either the macro has to change, something geopolitical has to change, which markets are not aware of. Second, the liquidity flow has to turn meaningfully, not like 1 day of selling or 2 days of selling. It has to turn meaningfully. And third, the valuations have to become obese, which they are not. So the pillars on which markets are going higher, I think that is intact. For me, that is very important here. But I want to go back to that block deal, and why am I insisting on that? Look at the block deals here. March 36,000, April 7,000, June 40,000 plus. And we are another 7-8 days are still left for the month of June. So the number could well be closer to 50,000. 50,000 crore of block deal. And the market has able to digest it. Yeah. That's the point I'm trying to bring out. And this week also we've seen 5,000 crore of block deal already in the first 3 trading sessions, and the Nifty is standing tall. So the market are digesting. So far the supply is coming. I don't think we are there yet where the supply is humongous and the demand is not there. So that's another point which we've been discussing. So the market, I think, is looking solid. Stay on the course. Very simple. Kuch mat karo. Stay on the course.
Yeah. Shavasana.
Savasana. Very simple.
Okay, so that's the easiest recommendation that we can give you at this point of time. Stay the course and get into that Shavasana mode and have that patience. But yes, what about the cues coming in overnight as well? It doesn't look very great given the fact that SGX Nifty is suggesting to a muted start, and that's because the US markets stumbled. It's the third straight session actually that the US markets have been declining quite a bit. Of course, yesterday what really spoiled the party is that comment coming in from the US Fed Chair Jerome Powell, wherein he said that all of his participants of the Fed meeting believe that there is more likelihood of rate hikes going forward. There seems to be a consensus there that there should be 2 more rate hikes for around 25 basis points as well, and that is what hawkish comments really set the set the slide in the US markets at this point of time, and that's the reason the Nasdaq was down 1.2%. Dow Jones also saw a cut of 100 points, and today as well the Asian markets have opened mixed, and as a result of all of that, the SGX Nifty is suggesting that we are going to start on the back foot as well. Nikunj, what do you make of these commentary coming in from the US Fed Chair Jerome Powell? I mean, is this incrementally negative, you believe? Because this was pretty much the dot plot that there are 2 more rate hikes as well. And in fact, risks seem to be on the upside rather than downside.
So Nisha, the Fed policy was not hawkish, it was extremely hawkish. But markets, they've decided to ignore that. But markets are ignoring that selectively. If you frankly take out all the hullabaloo which is happening in the US AI sector, it is not that US market are in a very fine fettle. S&P, the key components of S&P, they are not doing exceedingly well. It's not that your Caterpillars and the Disneys of the world are they are doing well. Walmart's not done exceedingly well in this market rally. So the market action in US is restricted only to few stocks. Now, what would be the importance of this interest rate hike? And I think I'm just going to, maybe I'm preempting this, but I get a sense that the best part of the summer rally, if it is getting over, I'll stick my neck out and say this, is getting over. It's getting over in consumer tech stocks, and it is getting over in fintech stocks. So let's look at ATM, Zomato, Policy Bazaar. I think the best part of the summer rally that is getting over. Let's look at the chart. Let's look at just the YTD graph of any of the stocks. That's yesterday's price action. Let's look at it. From the lows, Anisha, Paytm, which was sub 400, almost 500, is at 900. From the low, Zomato, which was sub 50 rupees, is now almost 75 rupees, touched 80 for a brief while. PB Fintech from 300, sub 400, is now at 600. I understand that they are talking profits. I understand that they were committed to, walk on the path of profitability. But even if you assume that they are walking on the path of profitability and put all the maths together, I think those stocks are looking slightly stretched. B, if interest rates are likely to hike, there is no way some of the growth stocks will do well. So I may be preempting it slightly early, but I think if you want to avoid one space, and if you have a time frame of 3 to 6 months, my sense is that best part of the rally, or the best part of the comeback rally for this year, at least in some of the consumer tech and consumer tech and fintech stocks may be behind us. Logic being, valuations are stretched. B, interest rate globally have not bottomed out, and we've seen that when interest rates they went higher in 2021 and 2022, what happened to some of these stocks? There is no way growth stocks will go higher now if interest rates are moving higher. That's my sense.
IT once again though is back in focus. You've got the Wipro buyback opening today. You've got Accenture, which is slated to come out with its numbers, and this sizable $1 billion deal by TCS.
Actually, the temptation to buy IT, I think, is there. And the reason why the temptation to buy IT is there is because the gap between where the markets are and where IT is, I think, is very large. And when the small cap index is nearing an all-time high, when the Nifty is at an all-time high, with the exception of 4-5 heavyweights, pretty much the entire market, good quality names at an all-time high, you say, okay, what is left? And what has not participated, I think, is IT. But should you really be buying IT? Let's understand the scenario. I would say that just because consumer stocks globally, just because you've got a rally in AI stocks and Nasdaq and Microsoft and Nvidia, should you buy TCS, Infosys, Wipro? No, sir. That's a completely different. That's a completely different kettle of fish, if I may use that word. These stocks will do well only when the business environment improves. What is the business Kahoot for some of these companies? It is banking, it is finance, manufacturing sector, and retail. I don't think those sectors in US are in bull run. I don't think those sectors in America, in Europe are in bull run. So I think IT is going to be a play only when you see real recovery coming back in the sector. The valuations are not that attractive that you want to be in contra buyer. So the way I see IT moving is that you will see actually some engineering based IT companies will start doing well. So you got Tata Elxsi, we'll talk about names some other time, but the theme, mid-cap IT, and within that, manufacturing stroke design capability IT companies have a scope to go higher.
Okay, so interesting to watch what happens with the IT space. But this morning, there was a bit of a somber news that also came from Cyient when we were watching out for DLM IPO, but it seems like they had to cut the IPO size. So that's something that we are tracking as well when it comes to the IT sector. But shifting focus to what's happening across the globe, of course, Prime Minister Modi has been creating history in New York. The Yoga Day event led by Prime Minister Narendra Modi at the United Nations headquarters created a Guinness World Record for seeing the participation of most nationalities in the yoga session. The Prime Minister Modi has now arrived at the White House in Washington for the second leg of his US state visit. It is here that Modi and Biden are expected to address a joint session of the US Congress. Prime Minister Modi will also hold bilateral talks with President Biden, after which the Prime Minister is also expected to meet CEOs and a cross-section of Indian diaspora. Prime Minister Modi will also be attending the state dinner hosted by the President and the First Lady. And you can see the visuals of the menu, the dishes that will be served on a display on the screen as well. So lots really lined up, and the euphoria and the enthusiasm around that meeting is also running quite high.
Well, the government has approved US chipmaker Micron Technology's $2.7 billion plan for semiconductor testing. In fact, the cabinet has given its nod to production-linked incentives worth about $1.34 billion for the plant as well, which is set to be built in Gujarat. In fact, let's hear out a word from Micron President and CEO Sanjay Mehrotra, who actually says he had an excellent meeting with the Prime Minister and is impressed with his vision for India.
Had an excellent meeting with Prime Minister Modi. Very impressed with the vision that he has for India and the advances that India is making. We discussed a wide range of topics, and we really look forward to greater opportunities in India. Micron is a global leader in memory and storage, and we are a supplier to for memory and storage in all end markets, from data centers to smartphones to PCs, and today really fueling the AI engine as well. So we are excited about the opportunities that exist for the future of memory and storage. And again, congratulations to Prime Minister Modi on his excellent visit here. So far, it's going great from my understanding, and I wish him and India all the best.
Okay, in the meantime, let's put the spotlight on some of the stocks which are in focus as well. Nikunj, we have discussed the IT pack, but I wanted to discuss Zee as well, because of course there's been a lot of to and fro with respect to that deal. SEBI coming in, SAT saying something else. Given the valuations are in a deep correction, do you think there is merit to look at Zee?
So, Anisha, there is one side which is the NCLT and the regulator. Now, we will only talk about it and we will only report what comes out, and there is a lot of speculation. And Zee is one stock where in a sense it's getting just kicked both the sides, given that there's a veil of uncertainty as to whether the merger will go through or not. There's a comment which has come from Sony that they are watching what the Indian regulators are doing. However, today the Economic Times has an interview, and where they're quoting Puneet Goenka, and this is the promoter of Zee. He's saying that the merger will go through.
Yes.
I'm not so sure whether I will remain the CEO. Now, for me, that is the punchline. If you frankly ask me, I discussed the matter with Sony and provided an explanation. The Zee and the Sony teams are talking to each other, and he's come out in open and he's spoken to Economic Times.
Yeah.
He pretty much wants to, and the promoter is not going to come out and speak to media when they know that the merger is not going to go through. The fact that the merger is still on, I think he's given an interview. Now the question is whether the Goenka family, in this case where the ownership is 4%, will they remain the CEO or not? What happens to the non-competing clause? And from a market standpoint, 96% of Zee free float is actually held in the open market. Now, because 96% of the free float is held in the open market, that makes the Zee stock very volatile. Unlike a lot of stocks where the promoter holding is 20%, 25%, most of the Indian companies have promoter holdings which are between 25 to 45% on an average. So that is the reason why the Zee stock is always volatile. It always moves, in and out of F&O ban. I mean, it spends the longest time perhaps in an F&O ban. So anything which is speculative, a whiff of speculation, one WhatsApp forward, I think that is the reason why the volatility in that stock is very high. I would say if you are, and we are not, and with the disclosure that we are a media channel, we are discussing in a media stock here, I guess one should wait and watch, because if the merger goes through, the terminal value of Zee is going to be strikingly different. So it is better to buy after the event rather than trying to whistle in the dark. So you don't whistle in the dark when the news of this magnitude could have an impact on it. But the fact that Puneet Goenka has given an interview to Economic Times, that makes you believe that maybe there could be a deal where he could not be the CEO and the deal could go through. Or he may be the CEO, provided we get clarity from SEBI and NCLT.
Yeah, otherwise why would he himself say that the merger will go through whether or not I am the CEO or not? In fact, he's saying that our current contractual drop-off date is December 20, 2023. We can go up until December without it impacting the deal, and we have as we have framed it as of now, he's saying. But if at all, it needs to be discussed at some point in time, we will take it up. So that's the word coming in from Puneet Goenka. But let's move on. Let's talk markets as well, and let's welcome on board Kunal as well as Naresh. Well, the all-time high continues to elude us on the Nifty, but a lot of action outside the index, a lot of it in the block deals. Kunal, what's the take on the index though? Seems like we're headed in once again for a bit of a soft start.
Yeah, I think a few more days of possible consolidation for the index before we march on to the new high on the index. I think what we've seen is a very consistent kind of a texture for the index where the day generally pans out into three different segments. An initial mild bit of a gap up or push from many large cap names, then a second half selling for most of the stocks. Whether it's large caps or the performing names, and then the third, in the closing segment is where we typically see a good recovery for individual large cap names. The Nifty tends to end in a bit of a flattish note. Now, what we've seen over the last couple of days, in fact, yesterday was the Bank Nifty trying to make a comeback with the HDFC Bank, many of the PSU banking stocks like Bank of Baroda, etc., making a very strong comeback for themselves. So hopefully the lagging part of the market trend where the Bank Nifty was underperforming, if that starts to show signs of good participation like what we saw yesterday, then I believe that there could be a strong possibility that we may sooner break out of that new high for the Nifty. So all in all, the texture still remains bullish on the index, but it's just that it's taking a bit of time to try and break past about the life high levels. 18,600 is the near-term support for the index.
Okay, so that's a take coming in at the index level. Naresh, what about you? What's your view on the market and what's the trade?
So overall, the view remains the same as Kunal. We are in a band of 18,600 to 18,900 roughly. We are seeing some bit of a recovery in the heavyweights. Yesterday, we saw HDFC Bank make a recovery, crossing a 10-20-day high. Same is the case with Reliance Industries, which is sustaining above the 2500, 2550 mark. ICICI Bank continues to struggle. Kotak Mahindra Bank is showing reversal signs. So overall, the structure is positive, and it's just a formality of going to a new all-time high. What we need to see is whether we see some leadership coming from some of the heavyweights, and we are getting the initial signs from yesterday's price action. So bias remains positive. One could actually be looking at a momentum trade once we cross 18,900 on Nifty spot, and then play a spike of 200 points from that breakout level. So overall, the view remains the same. Hold on to the long positions. Look to add in momentum.
Okay, but let's get stock specific and discuss which are the top stocks on our chartist radar. Kunal, what are you spotting?
So the first one is about Tata Chemicals. The stock looks attractive for a target of 1,040, stop loss 975. In fact, it's been an underperforming stock, has not participated in the last 3-4 months of the market rally. So I'm expecting a breakout for Tata Chemicals and hopefully the stock getting in line with the underperformance with respect to most of the other peers. And the second one is about Power Finance, PFC. That's stock which I've been advising since 170, 75 odd levels. It's moved up to 200 plus mark. Even yesterday, the stock showed a lot of price volume action for itself. So I would believe that Power Finance could be a good buy candidate from a positional play. 225 as a target for the stock, and stop loss could be trailed to 200.
Right. Naresh, what about your stock ideas?
So first is about Hero MotoCorp. The stock has seen a correction post the rumors and the news around it, but this correction is a good opportunity. The stock has retested that breakout zone of 2750, 2800, which is where we saw a spike from. The longer term structure is extremely positive, that the stock has gone through a zero period return for almost now 8 to 10 years. This could be changing. Multiple attempts around 2800 to 2900 levels done. Eventually, I would expect it to break this levels and go towards 3600 to 4000 in the medium to long term. Short-term target price would be 3200, stop loss at 2750. Second is a buy on Tata Chemicals. Again, the stock looks interesting. It's been in a tight range of 950 to 1020. On a dividend-adjusted basis, the stock is very close to a breakout. Sustaining about 1000 levels would be a short-term breakout, a range breakout, which could give a target price of 1100 in the short term, stop loss at 970.
Break right now. When we come back, we'll talk more stock specific ideas and we'll extensively talk about some of the consumer tech and fintech stocks.
Welcome back. Well, for now, it looks like we're going to start on the back foot, but the key would be that last hour that we have been seeing in terms of the change in market momentum and whether that drives us higher towards the life high levels on the Nifty or not. But talking about life highs and that substantial move from the lows, new age tech is one space which has seen a massive rally of late, and from March lows itself we have seen massive re-rating of these names, and Nikunj, they have moved anywhere between 40 to 100%. Paytm has actually gone up 98% from its lows.
Yeah. So let's look at the market cap. Let's look at the market cap of Paytm, and it's not the percentage rise, it's how do you value a stock? You value the market cap, and that just gives you a sense. So look at the market cap of Paytm and what they've indicated in terms of the potential profit they have. So even if you assume that Paytm is going to keep up to their promise and they will surprise us in terms of the path to profitability, I think the valuations now on that also are looking slightly stretched. So while there is a, why have these stocks come back up? Let's understand the first fundamental principle. First, the anchor selling had damaged them. B, interest rates have plateaued. And C, most of the companies have come out and acknowledged the importance of cash flow and profit. So these three factors have come together and why these stocks have come back. That, I think, is the reason why the stocks have come back. So what's next now? Markets already know that they would be walking on the path of profitability very soon. Interest rates globally have not peaked out, and C, the valuations now are not looking all that stretched that you really want to be in contra buyer. So my limited point is that you'll have to be, there's a wave of re-rating which happened in some of these stocks. I think that wave now could be nearing its peak. B, interest rates have not peaked out. Interest rates, when they keep out going higher and higher, growth stocks, they rarely do well. And C, again, valuations. So on all parameter, my limited point is that some of these stocks in the near term, either they deserve to pause button or they will go through some price-wise correction. 2 years out, 3 years out, you want to be in some of these businesses because they are the future businesses, they are the high growth businesses. But if you bought them purely to ride the trend, I guess the risk reward ratio right now is favoring that you book some profits, take some chips off the portfolio, take some chips off the table, and then perhaps plan your re-entry again. If you bought it for 3 to 5 years, please don't sell, because 3 to 5 years, some of these businesses would be strikingly different. 3 to 5 years, interest rates would be different. 3 to 5 years, the dynamics would be different. So depending on your time horizon, I think that's the answer. 3 to 6 months, I think, and I would preempting it, that I'm preempting this fall, but I think it's going to happen.
Now, what are the charts reading, Zomato, Paytm, etc.? You think for the near term they're done?
No, I think, it depends on the kind of expectations which you have. If you're expecting that the stock would rally up from 50 to 70, 75 rupees like what it has done in the last 2-3 months, to expect a similar kind of a rally in the next 2-3 months, because that may not be possible for many of these stocks. Because, every trend goes into stages where there is an initial stage of a flurry of price action, or a stage of hurrah where there is a lot of pessimism attached towards the certain set of stocks. Then comes a wave where there is some belief or confidence where traders start to take positions into these names, and then the stocks go into time-wise correction or consolidation. So I think many of these new age stocks are actually entering into the phase 2 where these stocks may consolidate over here for some more time. The good part is that when I look at it on the weekly or the monthly charts, the indicators are yet not overbought for these stocks, which means that there could be more room on the upside. So typically we say that a consolidation leads to a minor correction, but at times when the indicators are not overbought, a consolidation may be more of rising in nature, where these stocks may gradually move up higher. So the pace of rally should definitely slow down for these names, but the trajectory should be still on the upside.
Okay, the trajectory should be on the upside for some of these new age tech companies, but shifting focus, talking about what's the latest news flow coming in. Well, there were a lot of management meets overnight, the likes of Vijaya Diagnostics, Tube Investments, etc., as well as Bajaj Electricals. My colleague Sesha is joining us with the roundup of the key takeaways from these management meetings. Hi, Sesha. Good morning.
Well, yes, several management meet takeaways have come in from several brokerage houses this morning. First up, we'll talk about Vijaya Diagnostics, where the management has given strong guidance. It has reiterated its guidance: 15% revenue CAGR, 40% EBITDA margin, and timely break-even of its centers is what it has guided for. As far as expansion plans are concerned, management says that they are on track to open a hub in Kolkata, and they are looking to create a dense network in Kolkata. So positive commentary coming in from the management of Vijaya Diagnostics. Apart from this, Tube Investments will also be in focus, and that is because management says that the engineering business is expected to grow in double digits with scope for margin expansion as far as its engineering business is concerned. Metal formed business is expected to grow at 10% over the next coming years. Cycle business is expected to recover in FY24, and they are also scaling up as far as their exports are concerned. Moving on to Bajaj Electricals then over here as well, strong commentary coming in from the management where they say that premiumization theme remains the key. Premiumization and focus on research and development will lead to margin expansion going forward. B2C lighting business continues to be muted. However, they say that they are focusing on new SKUs and new SKUs will address untapped markets and help company enjoy market share gains going forward.
Okay, Ashesha, we leave it at that. Let's also take a look at Amber Enterprises management meet, and it seems that the mobility subsidiary that they have has been approved now as one of the few vendors for Vande Bharat trains. Lisa is here with all the key takeaways.
Well, yes. So, Amber, at its management meet, they have highlighted a few important takeaways. Firstly, let's see what's on Q1 FY20. How it's panned for them. So they said that the unseasonal rainfall in May and June, in April and May, that has led to the REC demand being muted, and also accordingly the industry is seeing an overall decline of around 20% on year-on-year basis. However, the other segment, that is their non-REC as well as components business, that is seeing some growth on the back of client ads as well as wallet share. They have also updated on their subsidiaries where they said that the Sidwal mobility subsidiary is one of the few vendors to be approved for Vande Bharat, and also their other subsidiary, that is the electronic one, Ilgin and Ever, that's seeing a sharp growth on the back of import substitution. The management also highlighted that the electronic segment that can see a 30% CAGR and with the margin expansion improving towards 6 to 7%. The company is also forayed into HVAC solutions and they will be exploring more opportunities in this. Their long-term outlook that also looks quite positive for the next 2-3 years, as they said that the exports is expected to scale up meaningfully, and also with large capex behind an improving utilization level, the ROC is set to rise to 15 to 20%. So Amber will be in focus on the back of these important takeaways in the management meet.
Okay, quite a bit of muted commentary coming in. Unseasonal rain spoiling the party, and they are expecting the industry to decline by as much as 15 to 20%. So that's something which you need to watch out for. But we are watching out for what's happening in the IT sector as well. Remember, Accenture, the global IT major, is expected to report numbers today. It will come post-market between 4 to 5 p.m. for the Indian time. But nonetheless, remember, the company has been going a bit muted into the earnings, and that's why we are expecting that it's going to be a somber set coming in. Having said that, the company has managed to surprise the street 3 out of the 4 earlier times. So there is that possibility of the upside always. In terms of the ask rate for Q3, it was between 3 to 7%, but the analysts are expecting that the actual growth in terms of revenue could be anywhere between 4 to 5%. So that's what they're penciling in. Having said that, it's a consulting business which has been a bit weak for the company, so need to watch out for what the commentary is there. Outsourcing business has been seeing a decent amount of deal wins, so overall the bookings are expected to remain quite solid, but it's a consulting business that one needs to watch out for. Of course, this will be the first time that we'll hear something more substantial come by from a IT major with respect to generative AI and the potential that it holds for all of these companies. So commentary around that will be important. Incrementally, how's the client conversation changing? Is recession really having an impact on deal flows, etc. or not? Guidance, is there any trimming that's happening? Because at the end of last quarter, we had seen that the company had tweaked the upper end of the guidance. What's the update now is something that we need to watch out for. But overall, the expectations are a bit muted. Let's see what the company delivers, because consulting will be important to watch out for. But we are not done with the IT talk. There's TCS as well, which will be in focus, and there's a positive news flow there. The company has signed a large deal. The base value of the deal is around £840 million. It has the option to go up to around £1.5 billion, but it's a large deal coming in nonetheless in the environment that we are in. Sharad is joining us to talk to us about the details of this deal.
Well, yes, deal-specific focus would be there in the IT industry as TCS has won back its contract from Nest. Now, to give the perspective, TCS has been working with Nest since 2011 itself, and over the next 10 years from 2011, they have been working on scaling up the operations and increasing the subscriber base to roughly almost 10 million people. Now, in 2021 itself, the contract went to Atos, but after 1.5 years of an 18-year contract, that was given back to TCS. Now the TCS has submitted its bid again and has actually won the contract back, and looking at the contract details itself, the commitment is for 10 years with the extension of another 8 years. The contract value is expected to be for almost £840 million, and if there is an extension, this would be £1.5 billion. Now apart from this also, this is a deal win, the company has stated, and it's not a renewal of contract, and they are expecting additional sales coming in. Now, what the analysts have been stating on this deal is that TCS order book, even if you take it out without the BSNL part of it, it's expected to be very strong and drive additional sales in the first quarter of FY24.
Okay, let's welcome on board then Harendra Kumar and chat about what he's making of the market structure and temperament right now. Harendra, hi, morning. Good to have you as always on the show. Let's pick it off from what our researchers were flagging, the large deal by TCS and the Wipro buyback. Wanted to understand if IT is a buy now.
Yeah, so I think there are 2-3 ways to approach the IT sector as of now, because the market is not clear on in terms of how the growth is going to pan out. So one macro indicator now is that the Nasdaq and the S&P 500 are recovering and doing well. So generally that means the economic outlook on the US, that the market is deciphering, is a lot more positive than economists are saying at the moment. So that's one positive. Number two is that the incremental sell notes by most brokerages are not leading to incremental sell-offs, in the IT sector, which means to say that the pessimism is currently priced into the stock prices. So that's the context on the price levels and the valuation that the IT sector is trading. So any incremental positive commentary that will come up will be cheered by the market space. So the risk reward at these price points become very, very positive for investors or tactical traders if they have to play the sector as of now. But our channel checks indicate the next 2 quarters are going to be soft. At least that is what our understanding is at the given moment. So it could be a little long drawn, but levels at these with the characteristics of good cash flow, large businesses, good governance, I think you can make initial entries into this space. So maybe from a negative to a neutral, if you are a portfolio allocator, would be a good stance to begin with.
Okay, so that was about the IT stocks. Next couple of quarters might be slow, but then the long-term prospect is something that you might want to bank on. Harendra, what's your take on Zee Entertainment? There's been a lot of flip-flop around this merger, which has been impending, much talked about. Where do you see it headed?
Yeah, so clearly, the one assessment that the market has made on the Zee merger is they want the merger to go through. So whatever investors we speak to, they like the construct of the merger. They love the long-term prospect of the industry and the space and how the Hindi general entertainment space is going to play out. Now the current regulatory diktats that we keep getting is putting, is like an overhang on the stock at this given point of time, which is pushing out the merger, and creating more doubts whether it will go through. So this is a construct. So at the moment, Puneet Goenka has come out and mentioned that irrespective of his position in the company, the merger should go through. I think this is a very pertinent clarification that is given out, and that should be positively viewed by investors. As we stand today, of course, it's a very dynamic way in which the merger is moving ahead. But at the moment, as of today's clarification, things stand to be positive.
Okay, that's the take coming in on Zee, and we just flagged off what Puneet Goenka had to say in that Economic Times interview of his. And I think the one key thing that stood out really was that the merger will go through whether or not I am CEO of the merged entity, clearly opening the way for if the merged entity, that's Zee and Sony, will have the Goenkas as the CEO and at the helm or not. But in the meantime, let's also talk about, what else has been making news of late. And, we've been talking about as to how it's really the block deals which are taking center stage. And it was no different yesterday as well. That big move on Piramal Enterprises, on Shriram Finance. Kunal, you think further headroom to go in these two names?
Well, maybe not immediate, Asha, but I think for these stocks, they were looking out for some sort of an event to break out. Because for Piramal Enterprise, for example, for the last, I think, 1.5 odd years, the stock was struggling into a major downtrend. There were 3 major attempts towards 200 DMA in this last 1.5 odd years. And I'm talking of it from 1300 levels, where the stock was still a point where the stock was sub 700 mark. And all of those 3 attempts turned out to be failed events. So I think it's a good sign that these stocks have finally managed to break out of their major resistances on the back of some event for themselves. This could probably catapult these stocks into a trending nature. So as I said, I'm not expecting any immediate follow through. A correction of at least 4 to 5% say over the next 1 to 2 weeks could be seen to the stock price, but I believe that the stock should eventually move up higher towards 1050, 1100 mark, possibly in the next 4 to 5 weeks.
Okay, do remember the likes of Shriram Finance, HDFC, EMC, TIM can also have the tailwind because FTSE has readjusted their free float, and that means there'll be more inflows. That will happen on a technical basis only tomorrow, but that'll start baking into the price from here on itself, so we'll watch out for that as well. Okay, so that was about some of these block deals data that we have seen, but let's also listen in to the rationale and opinion coming in from market veterans on when they see the Sensex hitting that 100,000 mark.
I haven't done the maths, but why not? Really, why not? It's just basic compounding. It's going to get there, yeah. Having been in the market for 30 years, I saw the Sensex at around 1,000. So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason.
Because I don't invest in any Nifty stock or any Sensex stocks and all. So when I talk about Sensex, that means I'm talking indirectly, I'm talking about my portfolio. So whether index doubles from here or not, that is a different issue. But I expect that this mid-caps where I am investing, in the general mid-cap category, good stocks should double or triple in next 2-3 years' time. And so far index is concerned, I think that index is a counting of 21 is happening index, 21,000, 42,000, 63,000. And I think that next stop should be 84,000 in 2 years from now. And of course, 100,000 is just a destination, I think, and miles to go for index.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 into 66,000, does it become 1 lakh or no? So plus minus, it would be there. Because broadly speaking, if I look at it over any reasonably longer period, the returns have been in this range. So, it doesn't need too much of rocket science. That's why I tweet saying you want 2 lakhs, you just extend the number of years. Because broadly speaking, this number doesn't come only from the fact that historically this has been the range over last, I saw it over 3 or 4 periods, which is 5-7 years. And then I think I did 14 odd years and then some 20 years and then my own my career, which is about 26-27 years, and broadly over every period it is in this range. But this range is not just coming by looking at historical numbers, but by the fact that Indian GDP in rupee terms grows about 11-12%, and then you can add 1 or 2 more percent for the fact that corporate sector might be doing better than the rest of the economy, or you might be doing it from an equity risk premium point of view, that equity returns are normally 5 to 6% more than the fixed income, a 10-year type return of the same country's government bond. These are all worldwide things. And also broadly, we feel that for a large part of the corporate sector, the earnings growth for normal, once they become a little, this thing is in the range of 12, 13, 10, 15%. And then some companies grow at 20, 30% for some periods of time. So from all angles, it looks that is the thing. So you just multiply and see, but I would think it would reach somewhere there.
Okay, let's see when that Sensex hits the 100,000 mark or not. But let's talk stocks, and which are the stocks on editor's radar today? Well, it's Cipla as well as JSW Energy. Nikunj, let's start with Cipla because Pharma is again seeing a lot of interest. But the stock has moved quite a bit now. What's your take here?
Well, when about 2 months ago, I distinctly remember Avan and we were chatting that to go for Cipla. And why you should go for Cipla? Because that was the time then Cipla, in a sense, there were a lot of tailwinds, and those tailwinds were domestic in nature, which is that Cipla's total aggregate revenue, which comes from US, and if you compare that, let's say, with the Lupin and what a Sun Pharma gets, Cipla gets a very large advantage in terms of the domestic pricing, and their reach is increasing, their portfolio is increasing. So they're a formidable large player in domestic market. Domestic market is where the growth is. But I guess a lot of that good news, I think, is getting baked in. Cipla was never a very cheap stock, but now it is trading way above the historical average. And as per the consensus number also, the upside is not there. 23 times for a business which is growing at about 15-18 times. Margins, again, not the best in the industry. One is better off, let's say, giving Cipla a skip or an avoid, and if you own it, I guess Cipla now runs the risk of underperforming. So at a time when large cap stocks in pharma are coming back, I think Lupin, Sun Pharma, and then Cipla. Or I would say Lupin, Sun Pharma, Dr. Reddy, and then Cipla. 2 months ago, I would have said Cipla, Cipla, Cipla.
Oh, well, yes, look at the 3-month chart. I think probably that's the time when we were discussing
started
it
talking
earlier.
about
So
it,
15% run-up has already happened. So now the
It's not
pecking
going to be
order
a
has
multi-bagger.
changed.
15% is what you'll get in some of these stocks.
Yeah, which is fair. In 3 months, 15% is not bad at all, right?
Yeah, these days you get 15% in individual stocks every day.
That's
But that's
true.
dangerous.
But that's dangerous, exactly. But let's look at the other stock. In fact, Pharma has been one of those underdogs which has been coming back, and so has the entire power sector. That's seen quite a bit of re-rating this year. And JSW Energy comes in the limelight because they're now looking at getting into those, renewables, the storage, hydrogen, etc. What's your take here?
See, it's a long cycle, but this is the future. And any company which is migrating towards clean energy, green energy, and if they're doing it without raising a lot of capex, I guess those are going to be the watchwords for the future. Now think about it, what they're trying to do. They're moving into clean energy. They've got, at a family office level, Sajjan Jindal and his family office has taken major stake in MG Motor, which means they are essentially trying to do what Tata is actually trying to do in the entire EV system, which is that you are investing in a car company, you got a power business, you're moving towards EV, and you're trying to create an entire supply chain. If they are able to grow at the current run rate without diluting, and as per the analyst report, EBITDA could double in less than 2 years, I guess markets are not recognizing that. There is an old school thought, Anisha, with the power sector that, okay, this is a regulatory sector, they cannot grow because of the regulatory issues, and there's a state discom challenge here. But if there is one sector which I think has gone through massive transition at a policy level, state level, and at the central level, I think is power sector. And I'm surprised markets are not recognizing them. See, it's a complicated sector for average Joe to understand. So it's an institutional dominated sector. But again, I guess somewhere markets are not really taking cognizance of where they are right now versus where they would move. Just imagine 10 gigawatt becoming 20 gigawatt. How many of us have spoken about it? We speak extensively about Paytm, Zomato, we speak about a lot of other stocks, but I mean, these are high growth businesses of future. Green energy, clean energy, hydrogen energy.
Yeah, these are those, the stepchild treatment is what power has been getting of late, but at least coming back into the forefront at this point of time. And today as well, Antique has actually double upgraded the stock to a buy. So watching out for a couple of these stocks, Aisha.
Oh, yeah, absolutely. In fact, let's pick it up with Harendra as well. Harendra, I don't know if you caught Nikunj's analysis on the JSW group, but you think they could be the next, ones to capture on the energy transition happening in the world and in India in specific?
Yeah, absolutely. I think, the characteristics of the power utilities are no longer a utility, quote unquote definition. Because over the next 7 to 8 years, you're going to have tremendous capacity addition on the renewable space. But beyond the private sector, which is Tata Power, JSW Energy, there is a lot of action also happening on the the hydro companies such as SJV and NHPC. They're adding 3 times the regulated equity in the next 7 to 8 years on 14% ROE. A lot of private companies don't generate that kind of ROE. And if they manage to execute well, these stocks are all multi-baggers. So we've been at the forefront of having this conversation on power utilities with all investors, and even with respect to hydrogen as well. So I agree with Nikunj that the power space, energy, is going to lead a lot of conversations and investment ideas. And mind you, this is the pivot where the entire capex cycle also resides, which is the energy transformation of India. So yes, it's still a hard pitch to investors at this given point of time, given that it's regulated and government is less glamorous. But yes, there's a lot of alpha to be made out there.
What, to your mind, is the best play, Harinder, in terms of if somebody wants to bet on clean energy? See, for Reliance and Adani, this could be the future business. But if a investor is, if an investor is buying into these stocks, you're also getting embedded value of a lot of businesses. Is there a clean play on this entire green hydrogen stroke clean fuel story?
So, Nikunj, hydrogen is a game of scale. At the moment, only two large conglomerates have, put their hat in the ring, which is Reliance and Adani's, who have gone out and said that we're going to bring it at sub $2 and we're going to play the entire ecosystem. And there are other groups who have come and had a conversation on that. But as far as our analysis goes, these two large conglomerates are going to lead the way because they have an integrated logistics play. They have energy as the primary business, and they want to play the entire ecosystem. Beyond that, hydrogen, NTPC has also spoken about, but it's going to be a large players game. If you're asking in terms of clean energy, private sector, good name, I would say Tata Power. I think it's a phenomenal characteristics of a company which has ESG components, which has growth, and now which has multiple avenues in terms of charging stations, EPC for solar, a lot of embedded value in subsidiaries or the opportunity to unlock value as well. So this is how you would want to straddle the power space, apart from some of the names that we discussed in the SJV and HPC earlier in the conversation.
Let's look at the power stocks. If you don't talk about it, we only talk banks, we only talk autos, but look at power stocks. NTPC, JSW Steel, to some extent PFC, REC, not in the power space directly but indirectly. In 3 months, NTPC has given a 8% return, 9% return. But in last 1 year, 3 months, JSW, no, this is steel. JSW Energy, please. This is JSW Steel. NTPC in last 1 year has given a 40% return. And let's look at JSW Energy, 37% return. Let's look at Tata Power. Now, Tata Power has a lot of other embedded issues also, but Tata Power has also given a 10% return. Harinder, why is that I don't hear HNI guys and retail folks talk about NTPC, Tata Power or JSW Energy? Everybody only loves to talk about HDFC Bank, ICICI Bank, Zomato, Paytm. Power सब use करते हैं. Power का growth हो रहा है, and we don't talk about this sector.
Correct. So because there are a lot of skeptics in terms of the aggressive growth numbers the government has put out and whether the companies can achieve those numbers. Number one. Number two is a lot of value capture is happening in terms of the renewable subsidiaries even before the capacity has come up. This is a little difficult for fund managers when there is no immediate earning visibility in the sheets at the given point of time. So these they are not able to reconcile. Third, of course, these are slow moving sectors because capacity expansion happens over a period of 3 years and the DCF captures it on an incremental basis on every year on a nominal basis. So the value capture is very slow and this does not excite a HNI market, given that they want fast moving vertical climb stocks. So obviously it's always sub radar, the individual investors. And like you mentioned, it's largely for, large investors who have a long term and time as a variable on this side.
Take coming in, just wanted to highlight a couple of counters. We were expecting big block deals on Sansera, engineering and delivery today. Seems to have happened already on the exchanges. So we're watching out for these two counters. For Sansera, it was a big block, almost 14%. The delivery was just around 2.5%. So those were a couple of counters. Separately, quickly, let's watch out for Wipro as well. The buyback opens today, so you can start tendering in your stocks for buyback today. We had done some analysis in terms of what kind of profitability do you expect to get. As we understand, for retail shareholders and small shareholders, which is of the value of 2 lakh and below, the acceptance ratio can be anywhere between 23 to 60%. And if you look at the net gains that you make out of that, that could be anywhere between 3 to 9%, depending on the acceptance ratio and of course the selling price, etc. ICICI Direct had penciled that the retail acceptance ratio could be 60%. You also had IFL talking about a 40% acceptance, and given the fact that the consensus Bloomberg target stands at around 390, most of the brokerages are recommending their clients to perhaps tender into the buyback. So we're watching out for Wipro as well. Quickly, Naresh, your take on Wipro as well as Cyient, because for Cyient the news flow is that the IPO size of DLM has been cut and Morgan Stanley today has downgraded Cyient.
So Wipro has been the worst performing large cap IT name if you look at it from the short term perspective and also from the last 2 years. The whole outperformance in 2021 has been taken out. The stock has fallen from 710 to almost 360, 370 levels. The problem is this is one of the only stocks which actually made a new low in March, April. A lot of IT companies held on to the bottoms made in September, October. So technically it's a tough one unless and until it starts crossing 410 levels. So would be an avoid as of now. No trade, could continue to be in a sideways range. Scient is something where one could be looking at booking profits. The stock has outperformed in a meaningful way in the IT pack. The stock had made a top around 1250 in 2021, and the stock today quotes at 1400, 1500. So it went up much beyond the previous highs, which is where the whole IT index stopped. And from the recent lows of 750, the stock has doubled up. So for now, the move is overdone for the short term. Could get into a sideways consolidation and drift towards 1300 in the short to medium term.
Bunch of other stocks which are going to be in focus as well. You know, Sansera block deal, of course, has happened. Delivery, we understand that Carlyle unit is looking to sell that 2.5% stake, and it could be set at a floor price of about 358 thereabouts. So look out for that stock as well. Of course, the Shriram Finance, FTSE has announced its weight increase. Nuvama expects an inflow of about almost $19 million. So look out for a further up move after the bounce in the stock yesterday as well. And there's Shree Cement, you know, news just coming in that the IT department is currently, they are actually siphoning through the Shree Cement premises, and as of now, they can't make an assessment at this point, but a survey is currently underway from what we understand. So that's another stock which is in focus. And by the way, Brent is back at that $77 per barrel mark. Crude prices have been on the surge, so you may want to look out for ONGC as well. But Harendra, at least in the near term, it clearly seems to be that NBFCs and insurance are the ones which are leading as opposed to banks, which are clearly on the back foot. Do you like anything out of this space?
Yes, we do. On a headline level, the conversation is shifting back in terms of styles from value to growth. So within that, one NBFC is Bajaj Finance. So I think most people bias are circumspect on its ability to transition in terms of the management change, plus the challenge from fintech, etc. But I think it's getting resolved in the minds of investors. And if growth is making a comeback that we believe it is, Bajaj Finance could lead the NBFC pack at the moment. We've seen a lot of mid and small caps rally, but I think it's time to again go back and pivot towards the larger names on the NBFC pack, and they could outperform small of the other medium-sized players at the moment.
I would ask you on Adani group of companies. I mean, it'll not look nice if you're on the show and if I don't ask you an Adani group of stocks, right, Harinder? Have they bottomed out? Is it a good time to buy into them?
Nikunj, the way most investors look at that space is that they are some of the most fantastic infrastructure assets in the country. In terms of the resolution in their minds, how the businesses are run, I think there is no doubt about that. So, for example, the only other thing is they have to reconcile is in terms of the valuations. I think that's pretty much corrected, and it's business as usual, given that the Supreme Court's put a lid on the whole conversation. So my guess now, you have to analyze the business on its merits. So given all what the brokerages have put out and including what I've used, I think Adani Ports sits on significant value. And then you have significant other slew of assets. But at the moment, I think the port business is shaping up really well, and there is value in the price. Cement, again, both Ambuja and ACC have always been on the radar of investors. The logistics play, cost-cutting initiatives and expansion should be on track. So I think sooner than later, these assets will also come back into investors' focus. That's our belief.
So let's understand that if you have to, let's say, bet on one Adani group of stocks for 5 to 7 years, would you bet on Adani Enterprises because that's the mothership? It has all the business which are incubated. Would you bet on Adani Ports, which is more like a toll bridge? It will keep on growing at 15-20%. Or would you bet on, let's say, Ambuja or ACC, because that's where the turn will happen when the economies and efficiencies would kick in? What, to your mind, for 3 to 5 years is the best Adani group of stock? Because our viewers, Harinder, they'll only like to buy one stock. Give us that one name.
Yeah, so like I mentioned, we think the whole infrastructure space, if you want to encompass, it has to be ports. That's one stock that we covered. And of course, ACC and Ambuja. But, the cement space has characteristics of only compounding at 9%. But I think the whole port story will be larger and will be an integrated story. So I think that's something that you should look at given the valuation that it is now. if you're looking at an incubator at this given point, of course, it's Info Edge, I think, which will have all the characteristics of new gen businesses. That's how we would look at it on the overall market space.
Okay, so that's the take coming in. InfoEdge is one of the other counters that you can watch out for. But Harendra, within the auto pack, wanted your take of where do you see value, both in terms of the passenger vehicles as well as two-wheelers?
Currently, obviously, it is, you are seeing the two-wheeler pack, which is TVS, which is doing well, and Tata Motors. So there is a pecking order in which the market is ascribing value. All have individual stories at this given point of time. But over the next 3 years, given what Maruti is doing, I would say that it has a long runway from here. We are quite enthused about the doubling of capacity that they're speaking about in terms of export as well, and the new pipeline launch. There is value in the business as well. So I think about 9,000 rupees as well, it would have significant upsides, at play on the auto pack.
Let's talk about some of the breakout counters as well and the ones which are sitting above 200-day moving average. Naresh, Vijaya Diagnostics, that one has seen quite a bit of breakout, and Max Financials too is sitting above the 200-day moving average. Would you recommend a buy?
So Vijaya Diagnostics has moved up with the whole sector as such, and it has already moved up from 410 to 480, and that's a major resistance zone. So I would wait out here, but Max Financial looks interesting. The stock has seen a deeper correction compared to the rest of the insurance name. The stock from 1150 went down to 650, below 650. In the last 2 sessions, it has done a catch up. Around the budget day, when the whole trend started on the downside for insurance, the stock was at 850. A lot of these names like HDFC Life, ICICI Pru have gone beyond those prices as well. So at 730, 740, there is a lot of catch up to be done in Max Financials. So it's a buy at current levels, would keep a stop loss at 715 and expect a slow and steady move towards the 800, 820 mark.
Okay, a bunch of other stocks which were big buzzers yesterday, and look out for what Motherson has been up to. Yesterday as well, it moved a good 4.5%. Almost 5%. Lupin, of course, after getting that US FDA okay for generic Spiriva, that stock buzzed up almost over 5% actually. And MFSL as well has been seeing quite a few traction in bits and starts. That stock as well held out by about 5% or so. Kunal, we know you've been bullish in Tata Motors for a while, but what within the auto Ang pack do you like?
So I think there's Samvardhana Motherson, which looks attractive. In fact, at 66, 67 is where we highlighted there's a change of behavior for the stock price. Now, the stock at 84, 85 levels where it closed yesterday has just come back to the last, I think, 1 year swing high for itself. So it's not yet confirmed a breakout of a multi-year chart. The long-term high or the all-time high for Samvardhana Motherson, I think, is at 175, 180 odd mark, which means that there's a lot of traction which the stock has to try and go into to try and really surpass those life high levels. But what the last 4 or 5 months of price patterns have indicated that this stock is or this trend is here to sustain. So I would be bullish on Samvardhana Motherson. In fact, there have been 2 minor dips in the stock price, almost a 7 to 8% correction on the stock price, something like what we've seen I think last week when the stock had corrected towards 80 sub 80 odd mark, and from there it's rallied back towards 85 plus levels. So I think these are the kind of dips which traders should be looking out to buy. Many of the other auto names, I think the traditional auto stocks, something like Hero MotoCorp is looking very attractive on the charts. Maruti, I would believe that in the next couple of weeks should get back into a rally mode back again and possibly head towards that life high of 10,000 mark. So there are a lot of stocks on the traditional large cap names as well as the auto Ang space which are looking very attractive.
Okay, that's the word coming in on Samvardhana Motherson, Maruti as well, along with Tata Motors. But the pre-open rates are indicating once again a very, very flat start. In fact, as flat can be. That's what we're headed in for this Thursday morning. But Harendra, we let you go on that note. Good as always for you to join in. Let me take it across back to Naresh and Kunal and get in some mid-cap ideas going. That's considering that's a more livelier market nowadays. Naresh, what's on your mid-cap radar?
So looking at Samvardhana Motherson Sumi, the stock has given a breakout yesterday, good volumes also. 84, 85 was the resistance for the last couple of weeks and also the previous major swing high. Good price action, good momentum, stop loss at 83 and a target price of 100.
Right. Kunal, what about your mid-cap ideas?
I'll suggest a buy on GSFC. Now, many of these, fertilizers odd stocks, they had shown a very good rally in the first couple of weeks of the month of May. Then these stocks have gone through a consolidation. But I think now the prices have come back again on a breakout mode. Volumes are inching up higher for the stock. So would suggest a buy on GSFC. Targets of 176 on an immediate basis. Stop loss at 158.
Right. Okay. Let's tell you what else is happening outside the world of equity markets and focusing on the exchange of gifts between the PM, that's Prime Minister Modi as well as US President Joe Biden. PM Modi has gifted a lab-grown 7.5 carat green diamond to the US First Lady. That's Dr. Jill Biden. In fact, the diamond reflects earth-mined diamonds' chemical and optical properties. Not just that, a handcrafted sandalwood box from Jaipur has also been gifted to the Bidens. In fact, the box contains a silver idol of Lord Ganesha, handcrafted by a family of fifth-generation silversmiths of Kolkata, a diya, a copper plate sourced from Uttar Pradesh, and a 24-carat pure and hallmarked gold coin from Rajasthan as well. And a global ride-sharing giant, that's Uber, will be eliminating 200 jobs from its recruitment division. In fact, this comes as a part of its ongoing effort to maintain a steady count and streamlining costs. Remember, these reductions present less than 1% actually of Uber's vast global workforce, which currently stands at about 32,700 employees across the world. Also, tech giant Intel has agreed to sell 20% of its stake in IMS nanofabrication firm to PE firm Bain Capital, and the deal is valued at $4.3 billion. Now, Intel reiterated that Bain Capital's investment in IMS will ensure a significant market share for its tools that are being widely adopted by chipmakers. And US Federal Trade Commission, the FTC, has filed a suit against Amazon, charging the retailer with enrolling millions of consumers into its rapid subscription Amazon Prime service without their consent. The FTC has been investigating the sign-up and cancellation processes for the program since March 2021. And back home, Assam floods have worsened overnight, with as many as 1.2 lakh people in 20 districts who have been impacted by the deluge. In fact, 780 villages under 45 revenue villages have also been impacted across the 14 relief camps and nearly 20 relief distribution centers which have been set up. Meanwhile, a little over 2,000 people have been taken into shelter camps across districts. And India has managed to seal a 4-0 victory against Pakistan in the South Asian Federation Championship 2023 with a hat-trick highlighter from captain Sunil Chhetri. In fact, the substitute player Udanta Singh Kuman has also been pushed the ball into the net in the final minutes of the match. Do remember, talismanic striker Chhetri has also scored 90 international goals so far and is actually just 10 goals away from a century.